Hi everybody, Steve Crivers here, developer of the MTPredictor software program. In today's video I'd like to look at how the US markets unfolded yesterday, which was Wednesday the 25th of March. We were looking at these in our live training webinar yesterday as well. The day started very well with some sell setups. These were with an STF, a red STF. You can see on the YM here we had a TS1 sell. If I place the analysis on, we were following this during the webinar and it went down to the first target there for a nice 4.7 hour profit. That was a very nice trade indeed. Same on the ES with our STF red. We had a TS1 sell at the same time there. If we right mouse click, the market came down. It didn't quite reach it on that first decline down, but then hit it at this particular level here for a nice 3.1 hour profit. There was a buy set up here, but this was against a red STF, so it should have been avoided. Now, during the webinar, we were asked about how this fits in with our large degree trend using the higher time frame analysis. So let's have a look at this. So I'll just clear this off. I'll go to our 15-minute chart, which is a higher time frame chart, and place our DPs on. Now, we had a DP from this prior pivot low, and as you can see, going into yesterday, we were well below that. The market had gone beyond that, therefore that one was no longer applicable. So we go back to the last important pivot low, which would have been this one here. As you can see, this was the last swing up into this high. So we place a DP support zone on the chart from here. Remember, these are on the chart in advance before the market gets there. So even before yesterday opened and the market was, or even just after it opened and the market was up here, this level was still on our chart. So let's go and have a look at the 3-minute and see how this looked. Now at the time we were looking at this and we were asked the question on whether we should come out at the first target or let the market or let the trade run. Technically, looking at our STF strength, which is our STF indicator in relation to our strength band when the market hits the first target, which it would have done here, the STF was weak, so therefore we'd be coming out at our first target. So on the ES, that would have meant a nice 3.1 hour profit, and on the YM, you see that would have made it a nice 4.7 hour profit. However, in the background, sorry, that's the NQ there, in the background of all this unfolding, we also looked at the daily picture. And if we go on the ES to our daily chart, our daily picture was of the market coming down here off our DP resistance up at these levels here. So on our daily chart, we were looking that the market was probably set to decline. In fact, actually today it's gone down even further. That's live today. So with that in mind, I'll just go back to the 3-minute chart, and you'd been a bit more of an aggressive trader. Sorry, I seem to have lost my 15-minute DP there. Sorry about that. I'll go put that back on again. Just take that one off and put that DP back on. Right, there it is. Let's go back to the 3-minute chart. So if you had been more aggressive, you could have decided to then start to trail with our ATR stop, which is our red and blue dots. So what would that have meant? Well, start to trail down into your next target. So that's what you're looking to do, is you're looking to say, rather than come out at our first target here, you're saying, well, actually we know there's larger degree support just below that, so you could have decided to want to head for that level. Now let's see what happens when the market reaches the larger degree support zone, which is here. If we now go down to our STF indicator, you can see it's now beyond our strength band here. In other words, the market's strong. That's when you would trail with our ATR stop. If you had have done that, the market would have come down to this level where a nice, well, almost 11-hour profit would have been available, which would have been very nice indeed. However, that's all in hindsight. So let's see how a trader could have re-entered once the market came out with our first profit target there. Remember, 3.1 hour profit, or on the YM, a 4.7 hour profit is a very good profit indeed. So what we do teach is we teach a trend continuation trade setup. So what's that? I'll just bring this back out of the way a bit. So a trend continuation setup, I'll just clear off all this analysis, is where we look to trade in the direction of the trend when it basically makes a wiggle at a minor low. Now for this, I'd have placed a DP off the last low there, and if I zoom in a bit, I want to make this a bit bigger, can you see how in and around here we had a little wiggle? In other words, the market came down into our DP support. This was actually where there was a long trade set up, which we've already discussed was against our large degree downtrend. But what you would have done is placed a trade to go short below here with a stop just above the wiggle high, which would have been here, and then you'd have then trailed with the ATR stop all the way down to this particular level here. So what you could have done is re-entered short and had another 3.8R profitable trade to add on to your original trade at the top there. So that would have been probably the better way to trade yesterday, adding on a new short trade to then take advantage as the market carried on down. Let's say unless you were very aggressive, and unless you were looking at this saying, well, actually I don't want to come out at the first target, I want to come out at the lower degree support level. Remember, this would have been on the chart in advance, and we looked at this at the time and said that the market got a little bit lower or a little bit more to go before we hit that level, and then you could have trailed with the ATR stop. But either way, it was not a case of missing any moves yesterday. It was a case of just deciding how much profit to take. Whether you came out with some smaller profits, 4.7R profit is a very respectable trade anyway, or whether you managed to either run your trade a little bit further, or whether you managed to basically take another second short trade to take advantage of the trend continuation. So whichever way you look at it, it was actually a good day yesterday with some profitable trades on the USE minis. And it's interesting to see the position now, because obviously now this, if I take the analysis off here, clear all analysis, we've now gone beyond this 15-minute DP here, so the large degree trend is definitely down. So it'll be interesting to see how the market carries on over the next few days. As I touched on earlier in the webinar, we are coming off major DP resistance up at the top here. So where's the next DP support zone? Well, on this daily chart on the ES, I'd come down to this pivot low, and the next daily support zone is down here at the 2020 level, 2019, 2021, so down at 2020. So it'll be interesting to see whether we get down to these kind of levels here. If we do, and these are breached, well, then we go right the way back to our DP from these levels here, and we're down into the 1947, 1950 area down here. So there's some potential weakness coming in if this support level doesn't hold, with a long way down to the next DP level. So it'll be interesting to see how the US stock markets unfold over the next days and weeks ahead. But definitely coming off these highs up here has given us an area of resistance, catching the highs, and indicated that that weakness was due, and that's exactly what's unfolding at the moment. So it's worth bearing in mind when you're a day trader to have this larger degree picture in the back of your mind, just so when you're short-term trading you don't get so basically bottled up in the shorter term swings. It's always good to have the larger degree picture in the back of your mind as well.